Okay guys, welcome to part 3 here. Now in this video I'm going to be looking at a couple of trade examples in the NASDAQ. Again, I'm recording this over the weekend of the 26th and the 27th. I'm in playback mode. I'm just going back to the most recent week, so I'm going back to Monday the 21st. Oh, we just looked at some examples in crude from Monday. I'm going to do the same here in the NQ. I got 5 days to work with here, but Monday was just really remarkable, and the volatility was just, we'll look at it in a second here. It's pretty remarkable. But before we get into the actual setup and the trade examples here, I just wanted to go over one more setting here that's available to you because it's so significant here, and this is a good example of how it might affect what you're going to see on the chart. So you'll recall that with our supply and demand zones, we have the choice of whether we want to show them at both break of structure as well as change of character. Now, again, this is a choice you want to experiment a little bit with. Now, of course, if you turn on the supply demand zones at change of character, you're going to have far more supply and demand zones on the chart. You may or may not want that. This would be up to the individual trader and just making a decision. Again, there are plenty of examples where you can recognize it yourself. You don't need necessarily software to draw it. We looked at a couple of examples in crude where it's fairly obvious where the market paused. There may be supply demand there. But I'm going to show you a couple of examples here having it on and off. And so I just wanted to remind you that that's an option. And again, part of the benefit of a trial is for you to experiment with that and make a decision for yourself as to whether or not you'd like that on or off. So I'm going to show you one example with the demand zones. Pardon me. We're going to look at the exact same trade setup and the same two charts here. One with supply demand off for change of character and one with on. This will be the one with it off. All right, so if we leave that, so you'll note here now, so if I were to turn these on, I'm only going to have supply demand zones where I have a break of structure, right? So any of the internal change of character, no demand zone there. All right, now let me flip over here. On this side, I have them on both. So you see here we're getting a supply zone here as well as multiple demand zones down here, yet I do not have a break of structure, right? Because it's keying off of the last pivot that created the change of character, and then it's creating the supplier demand zone here around that change of character. So as we look here now, looking at this, this is, again, we're back to here's my little playback module. So here I'm right back to Monday the 21st. The market's been open for a little over an hour, so we have the initial balance now established. This is pretty typical, right? So anyone who's been around the market and has been trading recently knows that this is incredibly common, right? So the market goes up first. First move in the markets is almost always a head fake, right? If they want to take it down, they'll take it up first and vice versa. Unless there's news, something that happened prior to the market open, that can alter this very typical sequence. But there was no news, no change in the no earnings released from Friday, no change in the geopolitical, madness that's going on. This is just pure market manipulation, right? So if you're not aware of this, here's a pretty good example of it, right? So clearly they want the market down. So what do? Now, take note here. Here's the open right here. That goes up 400 ticks. That's $2,000 up before they take it down. It goes down almost $5,000, right? Per single contract. So again, much of what I'm showing you here in these videos in this last week is just a great advert for trading the micros. My suggestion is that an account underneath $20,000 in this volatility level, that should be micros only, right? So just a suggestion from someone who's been doing this a long time. Okay, let's get back to the trade setup that's down here. So we'll note here now one thing, of course, since this is Monday, we're pulling demand zones here that were established in Friday's trading before the big rip up that this is kind of post-Fed. So interesting, right? Now this is where you have to ponder just for a second, right? So the implication would be here the traders that were long held it long over the weekend, and now you're seeing a reaction there. Of course, we're never going to know that. I don't know that that would be my first thought. But if I saw the market coming down this hard, right after that, I mean, fairly substantial up move, then we're coming down that hard with very little interruption. Now you will notice here, now of course I'm on a 1 minute chart. Where do we see a little bit of interruption here? So we get a little pause here, and I'm just looking for the up bars before the market continues down here, and we get a little, well, let's go in there and pop these here. So again, just because these aren't necessarily marked on the chart doesn't mean that you wouldn't perhaps look at those as potential, just that potential resistance zones if the market's going to start to retrace. Well, let's look at the first one here. As we first are looking at this, we can clearly see the range, right? The initial balance has given us the range. Right, here's the swing low, here's the swing high. Now, we can look at that and say, okay, well, given this range, what's the current trend? Well, that's not hard to spot, right? So looking at this 1 minute, we can see the trend is down. So if we're identifying, well, here's the 50% right here. So if we're going to be looking to get positioned in sync with the current trend, well, of course, if we now just divide it in half, right? I mean, here's our range. Well, here's our 50% level. So if we're thinking about sells now with an established downtrend, now this is a dramatic example, but just to reinforce in your mind, okay, I've got an established downtrend. If I want to be a seller here in the context of the idea that this might continue down, well, be more advantageous to be a seller in the premium zone than to be looking to sell down here in the discount zone. Again, just this is a dramatic example to emphasize that. I'm not suggesting that there wouldn't be opportunities to be a buyer, right? Here's one right there. I mean, that's a long way. I mean, given the range, we've got a $5,000 range here. We're just coming back to the IB mid here. I mean, there are trading opportunities here, but I want you to recognize, of course, are we trading with trend or against trend? So let's pull these off here. Oh, let the software do it here. So let me get rid of everything that I've just drawn on here. So we know, interestingly, an hour into it, VWAP is sitting exactly halfway, right, between the range. So we know it's a common tendency when the market gets too far from VWAP, it'll start to work its way back, and it gets too far above. All right, same kind of thing. So let's play this forward. Now, before I do that here, let's identify that there is a potential trade that's setting up here. Oh, let's zoom in there just a little bit here. Okay, so why? Couple things. All right, so number one, why is there a demand? Excuse me. Why is there a supply zone here? Because I've got a little up move. Well, let's see. I'm gonna draw it so you can see it. So this is the last up candle here before we head down. This high creates this change of character as it breaks that low. That's what leaves behind the supply zone. Now, again, right, if we're looking at this in this range down here, if I'm looking at this, okay, well, I haven't even gotten to the 50% of that supply zone here. So if I were to retrace into that, okay, that might be something to consider. I have gone past 50% of it. Right, so there's some finesse in this, right? So I've note here what I do, right? This is very typical. I retrace, I hit the golden zone. Now, so this would be a failed golden zone here that's headed for this target, can't get there. What happens? Right, the market doesn't have the strength, sellers don't have the strength to break the low, the IB low, and get that target, right? So this algo gets stopped out, and now the market comes back up. So was there a potential trade here? Well, you'd have been taking it without the series of confirmations that we might look for. So did you have a trade? Well, you hit the IB low, you had a swing, and you got a higher low. Now, at that moment in time, you don't know that that's a higher low, right? It's not until we break the golden zone here and we start to head up. Now, if it had gone here and then we'd come back to this zone here, now that might have been, well, that would have looked very much like we went through in some of our trade setups on the very first video, where I've had this change of character. Now I've had a change of character coming back into a potential demand zone. That would have been a textbook setup. That's not quite what we get here. So this is a little bit of, well, pilot discretion here as to whether or not that retrace and the failure to get a new low would be enough for you to want to take that. And then it's a question, well, let me leave that on. If this supply zone is in your face here and you've got these turned on, is that going to make you uncomfortable being a seller? Being a buyer here? Because the first thing you're doing is making an assumption that we're going to break this supply zone. Maybe, maybe not, right? So this is just an example of what you're going to be faced with here. That's not exactly the setup I'd like, but I mean, certainly turns out to be a profitable trade. I mean, just I'm stopping it here. You know, trades barely underway, and let's assume you're not getting the break here, but maybe you took, oh, you're coming out of that, you're recognizing the wick rejection there. You're already 142 ticks into this trade. So just one example, right? That's trader's choice as to whether that's enough for you to take that trade. Well, let me carry this forward here. What are we at? Oh, let's go to 100x and see. Let's let the market get a little bit further here, and then I'll pause the video here, and we'll come back when it gets to a more significant level here where we could learn something. So here, let's just pause. Let's just get this rolling up here for a second. Okay, let me pause it there. I'm going to hit that. Now, if I had been a buyer down here, right? So I've got a runaway train, right? It's a beautiful trade. Again, hindsight, right? Awfully easy. But as we're going up here, well, what can I see, right? Now, of course, once I break this high here, this is a change of character, meaning the sequence of lower lows and lower highs has now changed. Well, as I'm going here, what am I getting? Higher highs, higher lows, higher highs, higher lows. There's little micro changes of character in there, but I mean, they're within a tick, right? So the trend, the swing structure of the internal swings has not changed. So thus no change of character. Now this is here. I'm going to zoom in here just to show you this. Okay, look. Let's get right in on this. This is so subtle you can barely see it. Right here, because I have the change of character set to show on just a wick break of this low, this is showing me a change of character. Same thing up here, right? It's just a break, all to register as a change of character, and you have the choice of how you set this. If I want to set this here, and typically I'll keep change of character at any break at all, so a wick break is enough to identify the change of character. Same thing up here. Or do you want it to be a close, or do you even want them to show it all, right? These are some of the choices that you have available to you. But in this case, right, would you necessarily want a supply-demand zone off of those micro breaks? Maybe, maybe not. I mean, it's just kind of, you know, reinforcing that there's a lot of choice available to you as the trader in terms of what you want to see. But certainly anyone, and again, we're down to a 1 minute chart, anyone looking at this is going to see that certainly the internal swing structure is bullish, despite the fact that the larger trend structure is down, right? It's telling me right up in here in my face, right? Trend is down. What would it take for that trend to change from up to down? We'd have to break this high. Right, so right now I've got a weak high and I've got a weak low, because it's whatever breaks next is how we determine which is the strong, which is the weak. Right now they're both weak, right? So we're sitting smack dab in the middle. So we'll see. We just know we have a swing high. We also have internal. Now note it here. So I'll just do it this way. So here's the last low. Here's the last high, right? So this is my internal high low. So you can make a case that let me get that off of there. You could make a case here that if I was looking to get positioned here, that I could take this range here and I'd say, okay, well, here's my premium, here's my discount. So if I were to come back down here and get a change of character and come into the discount zone, that might be an area of interest. Here I can see a last little down here before this up. So perhaps, and if I were to turn the let's turn this off here. If I were to have some supply and demand zones here off of that little wick here, which I don't want here, well, then, I mean, certainly, again, nothing prevents you from just drawing this. It's, okay, well, here, this may be a little bit an area of interest that I want to pay attention to should the market retrace and come back to it. Right now, the software is not drawing it, but I can certainly identify that might be a place here. Well, look, the market moved out of here pretty aggressively. Maybe a few orders unfilled, bulls defending. Want to see that trend carry on, so potentially an area of interest. Now, if I pull it over to the left here, you can see, okay, maybe there's a reason that we paused here. Well, now at this point, note where we are. We've crossed VWAP. We've crossed the 50%, right, of the range of the swing. So I'm now in the discount zone. Let's let this trade keep going here a little bit. Here, I won't go too long here. If I need to pause it, I will. Okay, so let me pause right there. Okay, so note what has happened. Well, number one, we've just come right up to the 618, and we've had a one tick front run off of that. Well, of course, we could look left. Oh, that's not what I want. I want this. We could look left and say, boy, Could that have had something to do with it? Right? Is this potentially a little supply zone here? We just got to tick into it. Maybe, right? We don't know. So the software, because this is not a break of structure, a change of character, the software is not drawing a supply zone there, right? Because the size of the retracement is not big enough. Remember, we went through that. The ATR is not calling that part of the swing structure, but I can see it. So I wouldn't discourage you from drawing that as a candidate, or if nothing else, just an area of interest. Well, when we come up here and we react off of that, is that the trade? Well, that would have been a very aggressive trade. Right? So this would have required perhaps some more insight. So perhaps you're looking at a footprint chart, or you've got some other method, or it could be something as simple as you recognize where we are here. We're coming right up to a golden zone. Often those are front run. We're at the pre-market mid there. You're at the IB mid. You've just past VWAP. So maybe that's an area of interest. But per this approach, what you'd be waiting for is a return to pick up any latecomers or people looking to get on board that train. So there would be the consistent with this approach here. You'd have, well, let's see, I got VWAP here off of that. You see right here. Oh, get my arrow here. Right. So right here we get a little change of character. Right. Just barely, if you can see it there. So we break this low. That's a change of character, because I've been doing higher high, higher low, higher high, higher low, higher high. Now all of a sudden I get a lower low. Change of character, which is why this supply zone is drawn up here, because this is the last high that gave me that change of character. So leaving behind a potential, always that, a potential supply zone. So should the market revisit this might be an area of interest, right? So if I could get something like this, right, now it's going to look just like those line drawings we did where we've had break, break, break. Now we come down. Now that's the one. This is the revisit here, and look at what the risk reward would look like here. So if I'm putting that on there, oh, let's do it this way. If this is my stop and I'm entering, do it that way, and I've got a target. Right, minimum target would be some of these wick lows, but essentially you've got a potential target all the way down to the low. That's the weak low. So you're sitting there looking at something that could be 11 to 1. Well, let's be clear. Just because we have a supply zone here doesn't mean that we want to take every trade here, or that every trade is going to go to target. Of course not, right? There's many of these zones, right, are going to be stopped out. But what I want you to focus on is, what did the risk reward look like there? Right? Those are numbers that over time are going to be very friendly to particularly to the day trader. So looking for those risk reward setups like that. I mean, even if you took it here off of the 618. I mean, that's not a trade I would have taken, because there wasn't enough condition there. There wasn't enough swing structure here. But if you took it, what have we already done? Right? We've already done 136 ticks, right? Just to re-emphasize how the extreme volatility in the NQ right now. It's just remarkable. All right, let me just keep playing here so we don't get too long here. I'm a bit long-winded. Okay, so let's come back. Okay, stop right there. Okay, so what did we just see, right? So we were saying, well, the first trip up here, okay, maybe, but what I want to see is a revisit. So this is literally textbook here. Now, does that mean that that's a winner? Of course not, right? It just means you had a trade opportunity present itself to you. You've had a swing down here. We didn't get any break of structure, but again, right here, I did get a change of character. This would be very much like the one down here. Right, now sometimes they're going to work, of course, sometimes they're not. All I get here is a change of character, and then the thing just takes off. So is the potential there for it to do the same here? Well, again, that's up to the individual trader. We did get to the discount zone, pardon me, to the premium zone for the potential sale. So if you were sitting there with a sell, waiting for it to get into the premium zone, well, you're in the market now. I mean, if you're a scalper, let's get it right there. You're already 67, let's get it right there. You're already 72 ticks ahead there. So at 72 ticks for a scalper, I'm going to guess the risk is reduced. I would have, right? If that's me, I've tightened my stop, right? I probably, if I'm trading multiples, I would have taken some profit here, and my whatever runner I had, stop would be at break even. Now, that's me, right? Not everybody's going to trade it the same way. Not everybody's going to be trading multiples. But you've already had a 72 tick reaction to that. So just keep that in mind. We don't have to go down and break the low to have a decent trade set up there for a day trader. Well, okay, let's see what happens, because now we're sitting here. We've had that reaction at that golden zone. So, oh, boom, right? So, of course, right, many of these are going to break. Now, take note what just happened. We had the supply zone there. If the market breaks, because I have it set to disappear, to be taken off the chart, once I see a candle close beyond it, it's no longer there. Now, what is there? Well, remember, I have it set to create a supply or demand zone off of changes of character. This right here, this is the last, I can get this, my arrow. This is the last low that gave me the change of character. So thus it leaves behind. It's the last low, the last down bar here that gives me a low, that gives me a change of character. So that's why I have a demand zone still sitting here. Right? Change of character, change of character, change of character. Now, yeah, this is, I can't make this stuff up, right? So if you'll recall some of the line drawings we did in the first video, and you'll recall some of the examples we looked at in crude, how are you going to be feeling about the sell coming into this, right? Is that going to be maybe a tough trade to take? Right, just your emotions alone, right? Holy, really? I've got to sell that? Is it still a downtrend? Look up here. Is it still a downtrend? I mean, if you watch this thing take off, come down here, would you be surprised that it was all the way back? I think I was on that day. I mean, this is, what are you talking about here? I mean, that's a 962 tick move, right? I mean, these are massive moves. Right? How are you going to be comfortable selling there? Well, again, let's just be logical about it. You see, this is what makes trading so hard, right? Your emotions are screaming, hell no, I'm not selling that. Right? That's screaming higher. But if you're approaching the market through this lens, you're literally, since 10:30, you've been waiting. Maybe it'll come back. Maybe it'll get there. Could it get all the way here, and could it get into the discount zone of that range? Is that even, right? Is that too much to hope for? Is that too much to wish for? Well, if you watched all of that happen, that's exactly what you're hoping for. So again, look where we are. We're past the discount zone, so we're past the 50% zone. So we're in the premium zone. So if I'm looking for a short, this is where I'm looking for it. Anything here to work with right now? Is there any reason to be considering a short as I sit here right now, looking at it? Not that I see. I don't know why you would. If anything. Note here, internal low, internal high. If anything, I'd be looking for a buy. Boom. Right, but well, let's just play it forward here again. I won't let these go for too long. Oh, where am I at? 11:24. Okay, let's just let it keep going. Okay, so what do we just do? Now we're in the right. So after having done all of this, we've come all the way back to that supply zone. Now, is there anything there that suggests, oh, time to sell it? Right? Let's just short it at the market. Well, of course not. Of course not. So what are we at? We're at 11:30. Oh, I think we'll let this play a little bit further here. Let's see what happens up here. Okay, so let's stop right there. Now, if you did sell it right there, well, again, I know this is hindsight trading here, but again, what I want you to see is how substantial that move. That's 147 ticks just off of that. All right, but there was no suggestion here that perhaps the trend, this internal trend, was changing. Now I can see here I get I'm breaking this candle low. So okay, so I've got a little bit of weakness here showing up. I've got a potential, and down here I've got a demand zone here. Let's play a little bit further, see what we get. Oh, let's see here. So we're back into the zone, right? So so here we go. Right, good decent examples of what you're going to face, right? If you're using this approach. Now I've come back. Is that enough? Is that enough to sell it? Well, for some it could be. I certainly could be, right? So ideally, what you'd be looking for, your ideal scenario would be to get into the premium. So we'd want to see, do I have enough here? Well, I've had this little micro change of character here. I've had a little baby. Well, it's not very straight, but you get my drift here. I've had a little micro change of character here. Now I've had a little break here. This is all wick breaks here. So note, right, we're still in the prime location for a possible sell. Let's let it go a little bit further here, see what we get. Now, note what happened just right here. So I get a second supply zone. Why do I get a second supply zone? Because this is the last high right here that gave me that change of character. So it's drawn around the last up bar here before we head down. So you can see it right there. It's drawn off of that. So now I have potential. Now some of the swing structure here per the software is now setting up for me. So I've had higher low, higher high, higher low, higher high, all the way up here. I get a micro, and then I get a change of character here. Now I've retraced, right, so you can see it. I mean, that's why we do the line drawing, so you can start to visualize. Okay, so if we're coming back up here, this is an area of interest. Right, I recognize I've got a potential, just that, I've got a potential demand zone down here, but I'm certainly starting to see some of the swing structure that would be appealing if I was considering a sell. Let's just let it play a little bit further here, see what I get. Okay, now look what we just did. So we went from this supply zone, I got into the premium zone here of that supply of this supply zone here. On this move down here, again, that's bigger than you realize. That's 136 ticks. And what do? I land right into the demand zone here. Now, coincidental, just the typical ebb and flow of the market. I'll let you draw your own conclusions here, but now this is getting kind of crowded up here. So this might be an example here where you're like, okay, wait a minute, let me take these off because I want to focus on the structure that I'm in. I certainly am aware of the fact that I'm approaching the IB high. I'm well into the premium zone of the highest, the very highest supply zone, right? So I almost couldn't get, unless I got it right up here at the IB high, almost couldn't pick a better location for a sell. A supply zone within a supply zone. Now, take note here. Why is this still on here? Why is this still on, this second supply zone? Because there has not been a close above it. Right? Remember, I have it set to candle close. There has not been a close above it, so it remains on the chart. Let me just keep playing here a little bit further here, and then we'll go a little bit longer than I intended here on this one. So, okay, so now, just what did we just do? We just broke the demand zone here, right? So, is that the place you want to be looking for a buy right here? Right, so again, where are we? We're well into the premium zone. So we're looking to get on board for a sell. Where's the trend? Trend is still down. We're looking for sells up here. So you're starting to see some of this swing structure that we talked about here, right? So here's another way we could look at this. Right, what do we really have happening here? Right, as we drew it in the line charts, right? This is all just range. Right? That's just what we're looking for. Range. Now, all of a sudden, okay, if I'm going to come out of this range, okay, this kind of action here is what we're looking for. So this is just the kind of setup. So I've had multiple changes of character. So after this just straight vertical climb up here, after the straight vertical fall, all of a sudden the market is wrestling. What are we doing here? Swing structure is tightening. Note the time of day. We've just gone into the noon hour here, which is not uncommon for see the market consolidate. So you could certainly call this a range. We've got now a second supply zone that's been created because we've had this change of character. So the last down here that gives it. So you can see now as we start to come back, I've got multiple locations here that would be certainly areas of interest for a potential sell. Oh, we've wicked it. Now we've got a new zone here. Now look where we just did. Okay, let me stop it right there. So I've just gone. So here's the internal swing high and low. I mean, again, I can't make this up, right? It's just it's remarkable, right? So I've had just what I was looking for here. Now I'm coming all the way back, to the supply zone here. Looking pretty interesting here. So this would be now. So are there good risk reward scenarios here? Pretty friendly. Yeah, I think we could agree here. Any of these potential pivots, locations here. This is to some degree. This is your risk tolerance. Are you trading full size or micros? Let's let it keep playing here and see what we get here. So you can see now we're in that little zone here. We get a little pop back up into the very top one, and then now we start to go. So. Do you see? I mean, again, this is literally right out of the playbook here. So here we come. Now I get that final change of character right here to get me back into all of the supply zone here. I come right to the pre-market high. Boom. So you can see, you can literally kind of almost track it and intuit what's happening up here. If we start to break, right? So you see it in the change of character. We start to see one, consolidation, two, multiple breaks, right? There's indecision up here. Now here's the first break. Now we're breaking this low here. Again, it's not enough to create a change of character because we're doing lower lows and lower highs anyway. All of a sudden, higher high. Now I get the little break here after I've come all the way back up. This is, I mean, you can almost see this is just classic stop run right here. This is just a liquidity grab. So it's actually a golden zone here. This is we see this a lot around golden zones here. So if I draw it up this way, right, you see we hit 1, 2, 3 pivots in the golden zone here. There's one wick that goes through to run the stops on the other side of the golden zone. On the other side of the pre-market high, we go just enough to get into that supply zone here. Boom, straight down. Straight down. Right. So again, I mean, let's not forget everything we know about trading and how the markets move, and recognize that we can see a measured move underway here. So that, I mean, that's a pretty good trade here. Let's see what we had. So here coming, let's just assume, right, let's be realistic. Let's just say change of character, right? Your stop would be here. So there, you're right there. You got $2,000 right on that one. So let's do the risk reward. That's a good way to do it. Oh, let's use the top of that, and let's use our entry here, and we'll take it down to what we get here. The reasonable target here would have been the pre-market high. There's 8 to 1 right there. 8 to 1. Not a bad setup for a day trader. We got a little over $2,000. Risking, well, you know, again, how much risk is a function of what's appropriate for your risk size. Where do we fall to? Golden zone. All right, so again, don't forget everything you've learned about the market, or if you haven't studied that, the measured move, you need to immediately circle back to some of our earlier training and be having a very acute awareness of that, or use our auto fibs or measured move indicators so that you don't miss that, right? So our indicators would have identified that, so that would have been a reasonable target of where you'd be looking for potential support, right? It's just an algorithm that's sitting there. So what else is sitting there? If I just look, well, here we can do it. Well, do it with this little thing here. So remember that last little change of character? Gave us that. You see how it starts to come together? Now, so would this been enough to be a buyer? Well, again, that's a little bit, that's buying the falling knife. So not necessarily. Right, again, maybe you're looking at a footprint chart, you've got some insight, maybe you're looking at your super dom, something that would give you some evidence here. More ideally, I'd be looking for some sort of a retest, right? Then we come back that direction. Because why? So from swing low to swing high, here's the 50. Now I've gone into the discount zone here. So potentially now I'd be looking for any sort of a pushback up into that. The trend is still down. Right? The trend doesn't change unless this high is broken. Right now, this is the target, the week low. Now, do we get there? Well, of course, you never know. But right now, I'm leaning towards the buy side because now I'm in the discount range of the entire day's range that's been established by the initial balance. All right, let me pause there, and oh God, we're going kind of long on this one. Let me pause on this one, and I think there's probably a couple of other examples in the NQ, and then we'll spread out to some other markets here. So back in a second.